Welcome back. Now let's talk about the twin macro data of the month that came by. Retail inflation showed a slight uptick to 2.57% in the month of February. The industrial output for the month of January, meanwhile, dipped to 1.7%. Lata Venkatesh now joins us with her analysis. Lata, take it away.
Yes, that's right. The inflation number has come in at 2.57 compared to a poll of 2.37. Now, what is most important about this number is for the past 6 months, inflation numbers were repeatedly undershooting our poll numbers. That is what the street was expecting. After many months, we have an inflation number which is slightly higher than what economists were expecting, which itself is a relief because severe disinflation appears to have stopped. That is very obvious in food. Last month, that is for January, food disinflation was over 2.5%. That is, prices contracted by 2.5% in year-on-year terms. February prices, food prices are still lower than February of 2018, but it is only minus 0.6%. So it's more or less stable. One hopes the severe disinflation in food is over. The other important number to watch out for is core inflation, which is non-food, non-fuel part of inflation is called core. That basically services inflation. There you're actually seeing a spike, especially in education and health. Both have come in over 8%. So the overall core inflation has stands at 5.35% compared to between 5.2 and 5.3% in January. There is a slight uptick in core inflation. Given this combination, the expectation is that the Reserve Bank will cut rates in April. After all, the monetary policy target is 4% and current inflation stands at 2.57. So there will be a cut, but it will be just 125 basis cut, not a 50 basis cut. That's what experts are expecting. Very quickly on IIP, the January output number is quite pathetic and it was expected to be that way at 1.7%. Capital goods have contracted by 3.2%. Consumer goods, durables just 1.8%, non-durables just 3.8%, but this is on expected lines. We all know that the January car sales was poor, power output was bad. So this doesn't come as a shock, it's just a bad number.
All right, then IIP number not looking so good. But on that note, let's hear out what economists and experts are making of the food inflation numbers and expectations from the April 5th RBI meet.
The biggest surprise obviously has come from the food side. The headline inflation is marginally higher than our expectation. We were looking at 2.4%, so it's marginally higher. And it looks that the whole surprise has come from the food side. I think while we all expect an uptick in food inflation going forward, most probably we have seen the bottoming out. But even at the current trend, if the current trend persists, possibly the MPC target still looks achievable. So it kind of still poses a downside risk to what our inflation projections are for FY20 as a whole. We don't expect a deep easing cycle, possibly one rate cut in April.
I think the food inflation was unusually low, I think, and particularly the food was keeping the overall CPI inflation low, and it was expected to reverse, and we've been saying that for some time. And so inflation will move. I would expect another rate cut from the central bank, given the fact that that the growth is slowing and inflation is still remains muted. And even if it rises, it still remains within their overall comfort band.
This number doesn't change the rate cut expectations for the month of April in the upcoming policy meeting. Market is expecting that, and I think market will continue to expect that. Having said that, at least finally we haven't got a downward surprise in inflation. At least with the headline inflation bottoming out, I think 25 basis point cut will remain the base case, and I think that's the most fair way.